The bank is about to make millions of Canadians feel like they've won while quietly keeping them in debt years longer. Right now, people are renewing their mortgage, seeing a lower payment, and thinking they beat the system. They didn't, because there's a completely legal mortgage loophole that can cut 5, 7, even 10 years off of your mortgage without refinancing, and almost nobody knows it exists. The same mortgage, the same income, completely different outcome. Let's go. Here's the thing that almost no one understands about mortgage renewals. The bank wants you focused on one number, the payment. Because if you only focus on the payment, you stop paying attention to the timeline. And the timeline is where the real money is made. Most Canadians, they think a lower payment automatically means they're winning financially. And that's not always true. Sometimes a lower payment, it's just a slower payoff disguised as relief. And that's exactly where people get trapped. Let's say your mortgage renews tomorrow. Your old payment was $2,800 a month. The new lender offers you a lower rate. Your payment drops to $2,300. Most people are going to see that and celebrate the extra $500. But the people who understand this strategy, they see opportunity instead, because the mortgage loophole has nothing to do with lowering your payment. It has everything to do with redirecting the difference. And here's what most mortgage brokers will never explain properly. There's a massive difference between a switch and a refinance. A switch means the same mortgage balance, the same amortization, new lender, new rate. That's it. A refinance is different. You're restructuring the mortgage. You're either changing timelines, changing balances, or changing the contract itself. And once you refinance, everything resets. Now here's the important part. When you switch lenders, the lender legally has to keep your remaining amortization the same. If you have 20 years left, you keep 20 years. You can't shorten it during the switch process. And that's where the loophole begins, because while the lender controls the amortization on paper, they can't control what you choose to pay. And that, my friends, changes everything. So let's walk through this a bit more. You have 20 years left on your mortgage. Your old rate, 2023 3-year fix was 5.5%, $2,800 per month. You renew into a lower rate at 4%, and now your payment drops to $2,300. Most people take the savings. Smart people keep paying $2,800 per month. That extra $500 now goes directly against principal. Not interest, principal. That means every extra dollar starts attacking the mortgage balance immediately. No refi, no penalty, no AM reset. Completely legal. And this is where the math becomes insane. $500 extra per month equals $6,000 per year directly to the principal. It's not disappearing to interest. That's pure mortgage destruction. Now stack that with other strategies like accelerated biweekly payments. Most lenders allow it. And now most Canadians have no idea how powerful that is. The biweekly payment creates an extra payment every year automatically. So now you've got a lower rate, extra principal payments, and an extra monthly mortgage payment in the year, all working together at the same time. That's how people quietly shave years off of their mortgage. Not by making more money, not by winning the lottery, but by understanding structure. This is why I always say that rate gets the fucking attention, but structure will change your life, because two people can have the exact same mortgage, the exact same income, and the exact same rate. Yet one becomes mortgage free years earlier. That's not luck, that's strategy. Now, obviously, this only works if you can comfortably afford the old payment. If life is tight, take the relief, breathe. Nothing wrong with that, nothing wrong with improving cash flow. But if you do have the ability to maintain that higher payment, this is one of the closest things Canada has to a mortgage cheat code. And the craziest part about it is most Canadians will never use it, because psychologically, humans love payment relief. The bank lowers the payment and you feel richer. You relax, you take a deep breath, and then the bank quietly keeps collecting interest longer. That's the game. And once you see it, you can't unsee it. Now let's talk about refinancing for a second. Sometimes refi absolutely makes sense. Maybe you need to consolidate some debt. Maybe cash flow is tight. Maybe you genuinely need the payment lowered. That's okay. But here's where people mess up. They refi back to 25 or 30 years and they lower the payment, and then never accelerate again. That's where the long-term damage happens, because those extra years, it costs real money, massive money. So even after refi, you should still be thinking strategically. Lower the payment if you need to, but attack the principal whenever possible, because the goal isn't just to lower the payments. The goal is freedom, less interest, less stress, more cash flow later in life with more options and more control. That's what smart mortgage planning actually looks like. So here's what you should do if your renewal is coming up soon. Ask the lender about prepayment privileges. Ask how much extra you're allowed to put down annually. Ask if they allow bi-weekly payments. Most do. Then calculate the difference between your old payment and the new proposed one. If you can comfortably maintain part of the old payment, redirect the difference to principal. You were already used to paying that amount anyways, so now instead of funding interest, you're compressing your time. And time, it's the most expensive part of a mortgage. That's what I see people missing. The longer the mortgage exists, the more money the bank makes. So the real win, it isn't just lowering your rate. The real win is shortening the timeline. That's where wealth gets created. And when you're done with this one, check out my last video where I break down everything there is to know about credit scores. I'll see you there.